So it's been the must-buy stock because it's a good company and they're killing it in what they do. And it's been the must-buy stock because everyone's buying it. So more people are buying it because everyone's buying it, which means more people are buying it. So perhaps its share price shouldn't be what it is. Now, the Chinese Communist Party has come for Nvidia and said, yeah, we think you might be a monopoly. Certainly nothing political there. We'll talk about that. Plus, you should probably be alarmed about a company that's making a lot of waves and sucking a lot of people in. And it might be speculation that people are investing this. We'll talk with Zach Abra, who had a fascinating piece on the Twitter machine about how to speculate in the market in a way that's responsible, but starts with understanding what speculation is. We'll chat with Zach about this with the help of God Almighty.
The Todd Herman Show is 100% disapproved by big pharma, technocrats, and tyrants everywhere. No. From the high mountains of free America, here's the Emerald City exile, Todd Herman.
Today is the day the Lord has made, and these are the times to which God has decided we shall live. My friend and brother Zach Abra joins us. Zach, welcome back to the program.
Good to be back as always, sir. Thanks for having me.
My pleasure. I was just reading a little light reading here about the Biden administration spying us through our bank accounts and our financial data and targeting Trump supporters. Certainly a reason to have a lot of zeal about continuing to bank in America and feeling very, very good about our government.
I'm feeling good. Well, I know there's plenty of people that aren't feeling good, but Lord knows
Right.
I'm feeling better. I mean, it's and you know what's really interesting, man, and you're seeing it in a lot of different places, and some of it is somewhat surprising, and I'm starting to hear other people starting to pick up on it. There is, and you see it in the small business data. You see it in there. I thought about you. There was a funny. Do you know anything about this guy? He's primarily an investment journalist type writer or whatever, but his name's Rick Newman for Yahoo Finance. You ever read that? Okay, he is a water carrier for the left.
Yes.
Right. So all this good economic news is coming out post-election, right? Like, so a surge in new cars being purchased, right? Did you hear the reason he offered for that? Well, people are probably buying new cars because they know Trump tariffs are going to make the cost of cars go through the roof. So they're getting in before it gets nasty. And I'm sitting there going, okay, first of all, no matter what Trump does, there's no way he's going to do to the price of cars what your homeboy Joe Biden did.
Right.
Okay. First of all. Second, Rick, I don't know of any consumer base that goes out and purchases expensive, durable goods in anticipation of things getting bad.
That's a strong point.
Sorry,
Yeah.
Not how it works, right? Yeah. And then what's also funny is that married right up on the same day that car report came out, it married right up with the JOLTS report, which is job openings, and there's been a surge in job openings. So new cars surging, new job openings surging, but it's all because everybody knows it's going to be so bad. Right. These people, man, no. I've been choking on that guy's. I've been choking on that guy's writing for years, just because I make myself read his nonsense just to know what idiots are thinking.
Yeah, and I continue to watch with wide-eyed fascination, amazement, and sickness where people screaming about fascism is on the way. It's right around the corner. Here comes the orange fascists. And I'm reading this report from LifeSite News. This is financial monitoring of our finances. This is they purchase third-party information. They do this. It's no warrants. They just go out and purchase the information. And, of course, they can use FinCEN for purchasing above or below $10,000. All sorts of ways they can go get this. If you buy Bibles or firearms, you are flagged as an extremist. This is from a House report. Purchasing Bibles or firearms flags you as an extremist, and the committee says your beliefs or your bank account, you can't have both, that they're building up a database for prospective debanking. And this is of average people, because they've gone out and they've debanked the big guys, some of Team Trump, but they've been monitoring all of us and stacking us up into these little corners of baddies. But it's Trump that's the economic fascist and the social fascist.
No, naturally, yeah. Well, I mean, you understand where they're coming from, though. I mean, when you understand his plans to put gay people and minorities in concentration camps, I mean, that
Right.
it should give any freedom-loving person pause.
Right. That's obviously why they removed the objection to same-sex marriage from the Republican platform. That's obviously to get to the concentration camps, because that makes things easier by having Peter Thiel, who is an openly same-sex attracted man, being one of their top strategists, and then one of the choices for Secretary of State as well. So maybe that's not right.
Well, yeah, but I mean, I think you're right on top of this here. And I think the other thing that you got to consider too is that all of this is precipitated by the fact that Donald Trump has become, he is a founding member of the extreme religious conservative right. Right. I mean, bottom line is all Donald cares about is what's in the Bible. He wants to reinstitute Old Testament law. He's a Levitical law kind of guy.
He can't quote the Bible by his own admission, but whatever's in it that's what he wants.
Yeah, the historical interviews with Playboy. I mean, this guy, he's a Christian extremist, is what he is.
Right. That's clear for everybody.
Yep.
There's a form of extremism, economic extremism, you have educated me about in relation to share price. And I want to talk about this with Nvidia. And then I want to work into an analysis you did on Twitter about how to speculate in responsible ways. So I want to use two examples, Nvidia, and I want to use this micro strategy, and then I want to walk through your thread here, because if people want to speculate, I want them to do this in a wise way. I'm using a product that's wise. It's called Wisdom. It's a Bible-based herbal blend. I'm holding it now. And in fact, if you're on the video service, you notice I'm taking a dropper out of this. I'm having it. And it's almost sweet like honey. This is so good. I could drink this. This was inspired by Dr. Patrick Gentempo. And he was in the Holy Land, walking where Jesus walked. He's a doctor. He's a health freedom guy. And he got to thinking about how often sacred herbs are mentioned in the Bible. This is GMO-free. It's gluten-free for those who care. It's vegan. And it contains sacred herbs. But he did something else. He infuses this with sound waves and light waves. And he makes it in cold brew, small batch, so it locks in the potency of these herbs. What do? Healthy immune response. Healthy response to inflammation. You can actually harness inflammation for muscle gains if you do it the right way. Joint relief, a feeling of relaxation, all of this inspired by the Bible and the skills that Dr. Gentempo has been given by God to steward. So try this. Go to trywisdomnow.com/Todd. That's trywisdomnow.com/Todd. You will get 33% off. You will also get free shipping. You'll get a 180-day money-back guarantee at trywisdomnow.com/Todd. So a couple companies, and then we'll get into this speculation thread that Zach gifted the world with. So Nvidia shares fell after China said it's opened up an investigation over possible violations of monopoly law. Now, that's interesting coming from the Chinese Communist Party, which controls every company in China. There you go. Hey, all of a sudden, maybe Nvidia is not quite the 100% safe bet that everybody said.
Well, and this is kind of illustrates or highlights a fear or an issue I've had for a really long time.
Okay.
Which is, so if you look at the world, and we look at the world in the context of like pre-COVID and post-COVID, right? Mm-hmm. Actually, you know what? What's funny, and you could even do this with 08, 09, because I think that was actually the pivot point. And I think that it's become abundantly clear since 2016, via the election of Trump and Brexit, that things have progressed. But the world has become decidedly less collaborative, right?
Yep.
So, and the whole push toward global economy, all that kind of stuff. I think the thing that we do when we critique things, especially for those of us more on the conservative side of things, and I think especially those of us that are more on the Christian conservative side of things, I think that we need to be the place that becomes synonymous with being factually correct.
Okay.
Right. We need to have reliable information and reliable data and know what we're talking about. So if you look, like I said, so if you look at the world is becoming less collaborative, and there were benefits to globalism, right? Globalism, for instance, it there were a lot of benefits. It helped the explosion in a lot of technological advancements. It also was a big component in the unbelievable profit growth that we've had here in the United States. The problem is it came at a cost too high, right? So like everything, getting more globalistic in the 90s was probably a right idea. What did we do? We took it too far, right? And so the world is getting less collaborative. Well, when you look at the dominating nature and dominating in a complementary fashion, so I'm not saying it in a pejorative way at all, but if you look at the dominating nature of the giant tech companies, this is one of the issues I've had looking around the world going, do you think a bunch of these other countries, especially the ones that have some real stroke on the global stage, meaning they really make waves, the Chinas of the world, right? The Indias of the world. Do you really think they're going to allow our tech companies to come in there and do to them what they have done to us, meaning open up the door to being in cahoots with government? What about all the profit that they extract? What if it's just an economic argument where they're like, hey, we love your tech, but here are the constraints that we're going to put on you operating in our country or being listed on our stock exchanges, because we don't want you extracting all that value. We want Indian or we want Chinese companies to play that role, right? And China's already taken several steps in that direction with the restrictions they put on Amazon operating in their country, right? So we've already seen that. Well, now you go, okay, if you look at Trump in office, we're in a less collaborative place than we were with Biden, clearly.
Yep.
Part of it's probably because, Trump, or excuse me, Biden, we're no longer getting back alley deals from the Chinese. They're going to pay one of Trump's sons $3 million a year to sit on the board.
Yeah.
Right. So there's less ties that bind, if you will. And so I think that what you're seeing, I think one of the biggest issues with the valuations of these companies like Nvidia, like Apple, like Microsoft, like Google, one of the things that we hold, my biggest concern on holding Google on a valuation basis, Google is a little bit different because it's trading so much cheaper than those other companies are, though. So it's got some bad news priced into it, and we really think it's really undervalued. But you look at these other tech companies, you have so much of that, that excitedness, right? That euphoria built into the price of these companies. And I just think everybody's really overestimating in a more competitive world that these countries are just going to open the door and allow these tech companies to roll in there and extract that much profit from their economy. I just don't see it. And I think that is going to be I think that, and honestly, a cut in regulations is going to be something that is not helpful to big tech.
Okay, got it. And people continue to buy Nvidia because people are buying Nvidia. We've been talking about, like, hey, it's a great company, but it is not a company that's free from controversy or risk. And it's a pretty big risk if the Chinese Communist Party says, yeah, no China market for you. That's a pretty enormous risk. There's another company we need to talk about that is not, and this is coming from you, and I trust you, not a good company. And I think I want to compare them, Zach, to your speculation thread that you put up. And we'll do this here in a second. Guys, don't speculate on your body. Don't do this. I mean, yes, it's one thing to try a supplement that I endorse, and I always try these, and that's low risk. But please hear this. If you have a surgical team who's telling you you have to have back surgery, do you know the success rate in back surgery? For some forms of back surgery, it's flat, almost zero. And so please, please, please get a second opinion from Renew.Healthcare in Mexico. Please just let them have access to your MRIs. They'll tell you if they can help you. You might avoid surgery with ethically gathered stem cells that can rebuild muscle and tendon, even cartilage. Same thing applies to your knees. And there's one thing that I don't like talking about, because it's an uncomfortable topic, but it occurred to me I've never mentioned this. So I hate this, man. I can't believe I'm about to say these words. Erectile dysfunction. It happens to people. Sometimes it's a nerve thing. Sometimes it's an age thing. There's surgeries, there's pills, there's shots. Can I tell you something? I talked to the guys at Renew about this. A stem cell approach to this regrows cells. It reanimates. Okay, I want to be very careful and respectful. You don't need to have shots. You don't need to have surgery. Okay, the ethically gathered stem cells regrow body parts. And cartilage, tissue, muscle. And then the very, very serious one, traumatic brain injuries. I'm familiar with now 3 cases where Renew has seen incredible results using these ethically gathered stem cells, never anything to do with abortion, not ever, to help people recover from traumatic brain injuries from horse riding accidents, car accidents, biking accidents, okay? Please do not buy what the American pharma and surgical complex is telling you. Find out from Renew if they can help you. And I promise you, if they cannot help you, they'll tell you. They told me, and I talk about them publicly, hey, we can't help you avoid surgery, Todd. We're sorry, but we can help you recover 1,000 times faster. And they did. It's Renew. Go to renue.healthcare. That's renue.healthcare. So, Zach, there's a thread you put up. We'll go through this. I want to go through this quickly, and then I want to apply this company to this and use this thread for a discussion. You wrote, I know speculation can be a wonderful source of alpha, and you need to explain it to us. When deployed, executed correctly, it can actually decrease risk and volatility. Here's the problem. Most market participants don't know how to speculate a thread, and we'll unpack these. I'll just give the highlights. First, speculation isn't an investment, it's a bet. Second, speculation isn't a trade. Third, you must truly understand convexity and learn to target only convex setups. Fourth, you cannot speculate using leverage. Fifth, be selective. Lastly, you must memorialize your wins. And we'll go through and we'll pack the greater statements you've made. But let me bring into this a company that's getting a huge amount of attention. And you said a lot of retail investors, that's people like me and a lot of the podcast family, are investing in this. It's this company called MicroStrategy, which has valued itself at some enormous amount of money. They just turned around and bought another $2.1 billion in Bitcoin and drawing increased scrutiny from regulators. So what is MicroStrategy? And explain this to us. And you seem deeply concerned about people getting really taken for a ride.
Yeah, and one of the nice things about this conversation is, it sounds funny, but I like having financial discussions, or I guess the best way to put it is the financial discussions or investment discussions that I like having the most are ones that are independent of my opinion. Meaning because this industry is so filled with so many opinions. And one of the things I've learned is that given the certain place or certain time, any opinion is almost viable, right? Like,
yep.
This stuff that I'm going to tell you today, though, is purely fact-based. It is law-based. It is regulation-based, because I want to try to pull out as much opacity and smoke out of this, and so people really understand what's going on.
Okay.
I also, there's also kind of a weird little preamble here, but I mean this earnestly. I think that it is going to be a much easier thing for your audience to absorb because of the percentage of people that are spiritually focused.
Yeah.
Right. Meaning, one of the things that you have to do in an environment like this is what is going on in this environment right now is, a good buddy of mine called it financial nihilism, which is, we don't care how, all we care about is just making money. If we make money, great. We don't care how, right?
Okay.
We don't care, right?
Yep.
We're going to go buy ridiculous things because we think there might be a short squeeze, even though we know that it's not worth this, right? I don't care, YOLO, right? You only live once.
Yep.
Right? Financial nihilism. And so in that context, what has defined a good or bad investment has been purely the movement of the price. Okay. So price goes up. People go, it's not a fraud. The price has gone up. And you're like, well, it usually does, right? That's kind of a hallmark of most frauds. But what I mean by that is I see a lot of Christians getting caught up in this too. A lot of people that would, that talk about, look, at the end of the day, what is price? Price on any short-term basis in any market is opinion, right?
Okay.
Does the generalized opinion that OnlyFans is a wonderful thing for sex workers, does that open the door for your listeners to go become OnlyFans members and pay subscription fees?
Well, pray God not, since it's also adultery and fornication.
Right. But my point is that regardless of what public opinion is, as Christ followers, there's a set of rules that we know always hold true.
Right.
Right. And there's a set of rules that regardless of what society says, we're going to hold to them. Right.
Right.
Investing is very similar, meaning when you look at periods of times of people that have made really good money and people that have lost it or people that have maintained it, one of the constant threads you see in successful investors is the complete willingness and ability to cut against popular opinion, right? To sit there and to value data and intellect and wisdom and math above price movements, and having the discipline to allow those price movements to go against them for an extended period of time, right? But the key part to it is we as Christians need to be able to identify what is the good stuff and what is the bad stuff, and we cannot allow that to be, polluted by opinion, right? Of popular culture.
Right.
So now with that preamble, pardon the length, but getting into a discussion about MicroStrategy, the ticker symbol is MSTR, and this has been all the rage. The stock's going through the roof. Okay. It is going through the roof for, I wouldn't say fraudulent reasons, because the company is being very open about what they're doing. So, and I think we've talked about it before, but they're a tech company that sells some tech hardware. It's a decent business, but really nothing in and of itself. Probably on its own, it's a $1.5 to $2 billion business. Okay, so not a bad business, but nothing like this. Okay, and so what they've done is they have issued a bunch of zero coupon, meaning debt that doesn't pay any interest rates. And I believe the structure is they've issued it. I don't want to get your people lost in the weeds, but basically they've issued it as a discount to par. And the way that the bondholders that buy these bonds can make money is the value of the bond can go up over time because it can reach par value. And they're using borrowed money. Basically, they're levering up the company's balance sheet with unbelievable amounts of money. I mean, I think they've got like something like 60 or 70 billion in debt, or maybe not that much. But anyway, they're stacking on unbelievable amounts of debt to buy Bitcoin. Okay, and they've created this whole narrative, and all the Bitcoin people are all excited about it. They're like, oh, you got to own Bitcoin and master. Okay, so let's take a step back, first of all. Okay, first of all, what they are doing, and it's more complicated, it's more convoluted. Remember when we talked about one of the quickest ways to avoid scams or ways you're going to lose a lot of money? One of the simplest ways to identify things you want to stay away from are things that have unnecessary complexity, right? Yep. So unnecessary complexity here. They are levering up their balance sheet to buy. Now, remember, they're not paying interest on that debt. So that's one saver for them because it's zero coupon debt, but that debt has terms on it. Okay. So they've either got to repay the debt, which they have promised not to do because they're not going to sell any Bitcoin. When you got a company that's worth $1 to $2 billion and you own how many, I don't know. They own billions, tens of billions of dollars worth of Bitcoin, right? If the Bitcoin starts going south, you'll be forced to sell it. The business can't support it, right?
It's 41 billion in Bitcoin they own.
How much?
41 billion, and they're gonna they plan to raise 42 billion so they could get up to 83 billion in Bitcoin. Right now it's 41 billion they own.
Yeah, so they're just issuing debt like crazy, okay? And everybody's all excited about this. What the investors in MicroStrategy do not understand is that they have zero claims on that Bitcoin. Zero. So if that company were to get liquidated because it can't pay its debts, they get none of that Bitcoin. Right? Meanwhile, all of that market cap evaporates, right? And the reason they don't is because the creditors come before equity holders. So if they go on, so these people are buying the stock and bidding it up. Now check it out. The debt converts into stock. Okay, so what? Now remember, all the Bitcoin people, the reason they love Bitcoin so much is it's anti-fiat currency, right? They can't make any more of it. It's like digital gold, all this kind of stuff. Well, now they love this company. This company is using leverage to purchase the Bitcoin, of which the shareholders of the company have zero claim to, none. And oh, by the way, the one thing that they can bet on is they're going to get diluted, right? Because why? That debt is going to convert into equity. So literally, they are buying Bitcoin in a vehicle that nullifies all of the advantages and reasons they like Bitcoin.
But they're not buying it. They're renting it.
Yeah. Well, it's even worse. They're buying shares in a company that's renting it.
So they're buying shares in a company that's renting Bitcoin, doesn't even really own it. And there is an absolute promise that we don't owe you a dime if it remains debt. And if it converts to equity, congratulations, you have equity in a company that's renting Bitcoin that doesn't own it.
Yeah, and so what? And here you need to understand the thinking that goes behind this too. The bet that he's making, or the bet that most people aren't. They don't understand what we're talking about. But the bet that he's making is what the people that understand this bet, that think it can work. I don't understand why they think it can work, because these schemes have been tried many times. This isn't the first time somebody's going to lever up their balance sheet to buy a non-cash flowing asset. Okay, now it never works, right? Just because eventually there becomes an imbalance.
Yeah.
Now, this is a little bit different because there are zero coupon bonds. Okay, but the impact to the underlying shareholder is the same, because what they're betting on basically is that the only way this works is if Bitcoin keeps going up into perpetuity, right? It's the only way it works. Okay. And then eventually what you do, and I don't even know how that works, because eventually you've got to pay down the debt. But basically what you're hoping for, I guess, is you're hoping that Bitcoin accelerates at a rate that outpaces the rate you're being diluted at. Either way, you sit there and go, guys, just take the money and go buy Bitcoin.
That's my point. That's the needless complexity.
Right.
You're giving this money to this company that's renting Bitcoin, so you don't even rent it. They rent it. You just give them money that they say right up front, we're never going to pay you interest on this. It might convert to equity, but then again, we're only renting the Bitcoin, when you could just save up some money, go buy some Bitcoin.
Yeah.
Then you actually own the Bitcoin and all of the
Yeah.
advantages of the Bitcoin. Well, gosh, I wonder why regulators are starting to look into this a little bit. That's so fascinating.
Look, here's the one thing that I can tell you is that we are getting into the silly phase of this whole thing. Apple now has hit a new all-time high. Apple has grown 6% in the last 2.5 years. Okay. And if I pulled up a chart, it'd make your eyes water, but we show a chart that shows the valuation of Apple on one line, and then we show the increase in profits on one line. And the two lines, Todd, have gone like this.
Yeah, valuations straight up and profits are flatlining.
You will remember this. I doubt you won't remember this. Do you remember Scott McNealy of Sun Microsystems?
Yes, very well.
Okay. You remember the famous speech he gave 2 or 3 years after the crash? And they were like, your stock crashed. And he kind of looked at everybody and he goes, what did you think was going to happen? He goes, I'm not the one that determined the price of the stock. And he gives this lecture and he goes, you guys bid the stock up to where it got up to 10x revenue.
Yeah.
And he goes, do you understand what that means? Not 10 times profit, 10x revenue. So he kind of walks through how ridiculous of a valuation is that.
Yeah.
Apple, the largest corporation in the history of public markets and in the history of commerce, is now trading at 10x revenue, and it isn't growing.
So insane. All right, let's apply your speculation thread to some of these things here, Zach, in a second. People are heading into Christmas. Prices have gone up and time has gone down. No, it's only 2 weeks left. And hey, is the shipping going to come on time? And are people going to make it on time? And are you going, I have a friend of mine who's arguing with his wife. Are we going to Arizona? Are we staying here? Might be that after 30 years of marriage, they have a Christmas apart and there's bad blood and she wants her family up here. And it's just so stressful for people. Here's a hack, right? In addition to the word of God and taking all spirits captive, here's a hack. Magnesium Breakthrough is a full spectrum magnesium supplement with 7 forms of organic magnesium. One of its superstar outstanding capabilities is to reduce stress by helping to control the stress hormone cortisol. When it does that, you feel less stress, you feel more relaxed, it allows you to enjoy things better, and incidentally, you will probably sleep better. It'll be doing a lot of great things in the background, like helping you absorb carbohydrates more efficiently. But the primary thing in this season is please don't allow it to stress you out. Try to de-stress your holidays. Go to bioptimizers.com/Todd. Use promo code Todd to get an extra 10% off Magnesium Breakthrough. That's bioptimizers.com/Todd, promo code Todd. So, Zach, you put on the Twitter-X machine this really interesting thread, and we need to start with just decoding some things for folks.
Yeah.
You wrote, I know speculation can be a wonderful source of alpha. When deployed, executed correctly, it could actually decrease risk and volatility. Here's the problem. Most market participants don't know how to speculate a thread. What does finding alpha mean?
So alpha would be any type of excess return you generate over any type of given data set or market or index. So meaning like, let's say I'm indexed to the S&P 500. If the S&P is up 10% in a year and I'm up 13, I've generated 3% alpha.
Got it.
That's a very simplified way to think about it, but that's the basis of it.
All right. So first paragraph here, first tweet. First, you write, speculation isn't an investment, it's a bet. So it's all about sizing. A good place to start is speculating with no more than your investment portfolio yields. If you do more than 2x your bet, sell half and pay your portfolio back. If you lose it, you're done for the year. So help us understand that too.
So you hear all this talk about speculation. I'll give you some classic examples of what we've done.
Yeah.
First of all, you need to understand the difference between speculating and investing. Okay. When you are investing in a company, you are doing it based on numbers. You are doing it based on data. You are doing it and saying, okay, this company generates this level of profit. I am asked to be paid this much. When I compare that amount to other opportunities I have, it's attractive, meaning I'm getting more back for my invested dollar, right? I am investing for fundamental reasons. That is a calculated decision based on math, right? Now, it doesn't mean it always works out because things happen and things change, but time tested, it's been pretty proven that investing that way over the long run is the best or one of the best ways to invest in terms of overall returns over a long period of time, right? And the biggest reason is because if you follow that path, you will miss the biggest losers, right? And losses are far more impactful on long-term returns than short-term. So first of all, we have to identify that. And one of the biggest things that you see that happens in every bubble, but is happening writ large in this one, is that those two things are being conflated. They're being completely crossed up, right? Okay. So people have begun to think that speculating is investing. Buying shares, a classic speculation would be buying shares in a company like MicroStrategy, meaning there is no discernible, fundamental, or measurable way to evaluate that company and make a decision. So therefore, you are buying the stock for one reason and one reason only. You think and hope it goes up. Okay, that is, just be honest with yourself. That is making a bet, just like you would in a casino, right? Okay. Same thing. Okay. Now, that can sound bad. Yep. When done correctly, it's not. And I'll give you a perfect example of this. So coming out of a company that had been very cheap for a very long time, that had a lot of issues, but you know me and valuation, it gets cheap enough and I'm going to stop and look at anything. But it attracted us for a long time, but there were issues that we just couldn't quite reconcile, and so we never pulled the trigger on it. And the company was called Bed Bath & Beyond. Well, coming out of that was a stock that wasn't recovering off its lows. And the reason it wasn't is because the narrative about the stock was they have no online presence and it is going to be their quick death. Well, that was a ridiculous assertion because people that were saying that didn't know anything about the company. We had been studying the company and they were drastically and radically increasing their online sales as a percentage of their overall revenue. The new CEO was doing a great job at ramping up that side of the business. So we thought that was a great opportunity because what was pushing the stock down was negative opinions that were unfounded, right? But that was still a speculation on our part. Why? Because it wasn't based on a runway or a trajectory of the company that we could look at and we had any confidence on over the long term. It was more looking at a company that we felt was not about to go under, that we knew wasn't about to go under, like as in the next 6 to 12 months.
Yeah.
And it was a company that was doing considerably better in that environment than what people thought. And it seemed like a great place to take a bet because we were buying it at its low mark for like the last 15 years. Okay. And so why did that feel like a good place to take a bet? Because we knew really quick when we wanted out of the bet. We wanted out of the bet when it broke below that previous all-time low and created new lows. And then we're like, okay, we'll get in and out of this thing quick, but we'll take a flyer on it. Okay. Well, we ended up buying the stock at about somewhere between $3.50 to $4 a share. Fast forward about 3 months, we sold it for 38. Okay.
Love it.
Right now, here's why it works. There's plenty of speculations that we've lost money on, but we structure it in a way, remember, because if it goes down, we don't buy more. Why? Because we just made a bet that it went up. We lost the bet. We take our loss and we move on. We put that 6 or 7% loss in our pocket and we move on. We take it on the chin like a big boy, right? Well, we can take a few of those shots here and there, knowing that the Bed Bath and Beyonds, the GameStop bet that we made 5X on, right? When we hit them, if we're disciplined about them and cut our losses early and stay disciplined, which we have to about speculations, right? You probably won't win most, but if you do it correctly, right? Convex situations, meaning situations that appear to have very little downside, but a lot of upside potential, right? You want to see the right setups, and then you still don't bet them big. When we bought Bed Bath & Beyond, it was only a 3% slice of the portfolio. But when 3% slice of the portfolio goes up 10 or 12x, that's a big win.
Huge.
You don't need to bet big to win big, right? And so what we're saying is, look, I'm not encouraging everybody to go out there and speculate, because it's something that I haven't close to mastered. It's something that nobody will ever master, but it can be like, clients will ask me all the time, Zach, I've got my own little trading account here that I'm wondering if I can buy this. So my answer to them always is, yes, you can buy anything. Just don't buy it in big size and have very strict rules. If it does what you think it's going to do, or you hope it does, and it goes up, great, ride it. But if it doesn't do what you think it's going to do, take your loss and move on.
Love
right?
it.
So
Love it. Great.
That's kind of a synopsis. Yeah.
Okay. So great explanation. I want to talk about why it isn't a trade and why you cannot speculate using leverage. We'll talk about that with Zach Abraham, Chief Investment Officer, Bulwark Capital Management. This is a guy who, you want to talk about speculation. This is a guy who placed a bet, and this is a stupid investment. You think about this. This guy decided to start a company with a meth addict, cocaine addict, gambling addict, a guy who was sleeping on a couch, screwed up his family life, completely messed up. He was a joke in his hometown. People knew him as a drinker and a drugger, a loser. So he decides to start a company with this guy. Yeah, he bet on himself. His name is Mike Lindell. He bet on himself, and MyPillow became very famous because he went to trade shows. His daughter made the logo. Did you know that? The first logo and the existing logo for MyPillow, I think she was 14 when she made it, because he couldn't afford anything else. Traveled the country, going to trade shows and fairs, standing there, hey, come and check out my pillows, and look, I'll put them in a dryer and they'll puff up. He did that so long that finally this thing broke through. Then he decided to express himself. He didn't think the election was fair. He spoke out, and boom, enemy of the state. Boom, the FBI coming up to him while he's in line to buy Chick-fil-A, taking his phone away from him. Boom, retailers canceling orders. It just happened again. A big retailer just canceled an order with my product. Mike Lindell got in touch with us. Could you guys come in and help? And yep, we haven't worked with Mike in a long time, but we're glad to do it given what he's done for free speech and election integrity. So here's what we're doing. When you go to mypillow.com/Todd, use promo code Todd, you're going to get the lowest price ever on the classic MyPillow. This has never been this low. Go to mypillow.com/Todd, use promo code Todd to get the standard MyPillow for only $14.88. It has never been that low, not once. Use promo code Todd for discounts on the entire MyPillow collection. Plus, know this. They're extending the money-back guarantee period all the way through March 1st, 2025, when you place an order between now and the 25th of December. All of the pillows are on sale, but none of them as dramatically as the MyPillow Classic. It's mypillow.com/Todd, promo code Todd. So, Zach, you talk in this thread very, very well about what is and is not speculation. And you say that speculation is not a trade. So help me understand that part.
When I say that speculation is not an investment?
No, you say it's not a trade. You write, you write this. You must understand speculation isn't a trade, meaning there must be rules and parameters set out at the jump. Before any position is taken, you need a battle plan. How much you're willing to risk, at what price do you take, at what point do you take profit? Failing to plan is planning to fail.
Yeah. So I probably mistyped there, because what I was trying to say was at its very nature, speculation is a trade. It needs to be handled like a trade, not an investment, right?
Okay.
And what happens, and this is where it goes wrong. and this is where it goes back into kind of crossing up with our moral guidelines, right? Price go up does not mean that you made a good investment decision. It means that you're on the right side of a trade for now. Okay. And here's the problem. Even when speculations work, guess what happens? The investor forgets that it's a speculation because it's worked, right? So then it becomes, oh, I love that. Don't get rid of it. I'm like, well, yeah, because it made you money, but treat it like a car. Okay. It's supposed to get you to work. Once it does that, you get out. Okay.
Right.
You don't just sit in the car all day long.
Yep.
So understand now, an investment is different. Now, an investment is something that you can buy and hold for a long time because it stays within your parameters and you're not freaking out about that, right? So what I mean by this is saying anytime the so much pain can be missed by investors if they properly evaluate what they're going into when they go into it and classify. It's one of the things we do at our investment meetings every single week is when one of our analysts comes in with a new idea, the first question we ask is it a trade or an investment? And they all know what that means, right? Meaning if it's a trade, here's how we're going to look at this. We're going to have an exit point. We're going to have an entry point, all that kind of stuff. If it's an investment, we want to have enough confidence and have done enough research and understand that company. The litmus test for me is, do we understand it enough to where if it's down 20%, we buy more, right? Okay. You do not do that with a speculation. You just don't. Okay. And I could tell you story after story after story. And it's one of those things where either take my word for it or you will learn it on your own, but learn it you will, because that is the price to play this game. Now, where the old guys in this game say, look, son, you got two options learning that lesson. You can take my word for it or you can learn it on your own.
But you will learn it.
You're going to learn it. Yeah. Just right. And that's where I get back to it circles back to this whole MicroStrategy thing. Why do I talk about it in set certain terms? Because this has been done so many different ways, so many different times. Okay. When you are levering up your balance sheet to buy a non-cash flowing asset, even if that debt, quote unquote, isn't costing you any interest, you have an imbalance. And at some point you will get shook out. And that's why in investing, if you look at the history of markets, time has always been on your side. Right? No matter how bad it got, if you held on, markets came back. Well, when you add leverage and debt into that, you have officially started a clock, right? Yep. You have taken away your greatest advantage as an investor, which is time. You can sit and wait, right? Once you add leverage in, now, it's hard enough picking an investment the right way or getting it right, but getting it right in the right timeline. The minute you add leverage, you now have to be right about the bet itself, the investment itself, and you have to be right on the timeline. If you're wrong on either, you've got big problems.
Okay. Right? That explains to me why you don't speculate with leverage. That makes all the sense in the world. Okay, this is the most poetic thing that you write, I think. And this is so, this means something to me. I want you to explain this to people. I know we're short on time with you. Fifth, you write, be selective. You have to wait for your pitch. I cannot emphasize this enough, you write. Learn it from others' mistakes or from experience, but learn it you will. I find that I run into one or two high convexity, high conviction bets every 12 to 6 months. You cannot chase a trade. They have to come to you on their own. So it sounds like you're going to have heart, I think, but every 12 to 16 months, it's really that infrequent that you place a bet or speculate.
No, we might place bets, but meaning, little opportunistic things we see, but probably the best example I can give you is, uranium earlier this year was one where it lined up at the price it was at, and to us it just looked like go time. It's up since then. We've held those positions for a long time, but probably the best example of this was going into 2022. At the end of 2021, we were really pounding the table, just saying we really firmly believe the best place to be is long energy and short tech. Had you followed those trades, had you put your entire portfolio long energy, short tech, in 2022, the market was down 21%. That trade was up like 50. Okay.
Wow.
But it had been since going into that I had felt that kind of certainty. And you just don't know when it comes. It was sort of like GameStop and Bed Bath & Beyond. Those just came to us too. And we'd watched them for a long time, and all of a sudden the stars aligned and you kind of go, there it is. And I joke with my buddies that manage money. When you see it, you see it. You can't fabricate it. Where you get in trouble is when you've seen them a few times, you start trying to create seeing them. You just can't. And I don't have a good reason for that. It's like life. Like, why do you go out on the golf course some days and shoot 76 and other days you feel like you can't break 85 to save your life? I don't know. It's right. The variability of human beings, right? But every good investor I know goes through these periods of times where they feel like they're so bloody hot, they can't miss. And then other times where they're like, this looks like Japanese to me, right? Like nothing makes sense. And one of the reasons you don't want to play those bets or speculate unless you see it is when you're in those times where you don't see it is where you lose tons of money.
Yeah.
It just, you got to let it come to you and you got to let it play out. And yeah, you can't create the opportunities.
Then, of course, since this is betting, and you wrap this up really well, you call it memorializing your wins. In other words, pocket the money, move on. The car got you to work. The speculation was a car. It got you to work. I say the same thing with people who go win money in casinos. Great. Fantastic. Now, take the money that you paid to gamble, put it back in your bank account, and if you want to keep gambling, just use your winnings.
Yeah. Yeah. Investing's the same way, right? And that's what I mean by memorializing our wins. Meaning, look, I don't care if you take that profit and you dump it into the S&P 500. I don't care if you take that profit and you dump it into treasuries. I don't care if you take that profit, dump it into a REIT, or dump it into like a blue chip dividend paying stock, right? Just something that 5 years from now will be there, right? Because now you hit a bet and you are turning that bet, you are memorializing it. That win will not escape you. It ain't going away. And it's going to be there. And that is just as important. Everybody thinks about the win has, I don't want the stock I'm buying to go down. I really want it to go up. But if you do not memorialize your wins, it won't matter because whatever you win, you'll give back.
Yep. I love it. Great way to formulate it. Thank you so much. Please say hi to your beloved BIPOCs.
I will certainly do that.
I'll say hi to my YPOCs over here. Zach Abraham, Chief Investment Officer, Bulwark Capital Management, knowyourriskradio.com, 866-779-RISK. This is the Todd Herman Show. Please go be well, be strong, be kind. Please make every effort to walk in the light of Christ.